Okay, well, we guys, we will start back again. We'll just take maybe a few minutes. Who is here? We'll take a few minutes, okay, before we leave. Uh, my battery is weak. Okay, so I was going to show you, I wanted to describe a downward trend, okay? Let's look at AUD USD. So let's look at AUD USD, and then let me go to H4, and then let me okay, so let me use this now. You guys can see my screen, right? And then you can hear me, right?
Yes, sir.
Okay, so from this point now, you can see a high at this level up here. Let me just put a line there. You can see a high there. Okay, you can see a high point here. This is H4, this is 4 hours, okay? And then you can see uh the high point, and then from that point, you can see that the market has been going down somewhat, okay? So let me just use this to just explain now. Even though it doesn't show too well, but from when the market is going down, you see that this is a high. This can be another high. The market has not gone. Let me try to see. I need something that vividly explains it because I want to explain what establishes a trend for us. Okay, I want to explain what establishes a trend coming. Good. So let's use this one. Let's use this. Okay, so this is NZD USD. Okay, now safely I can draw trend lines here to just show you. Look at it. The market is going down. These are the lows that is forming, as you can see. Okay, so you can see here. You can see here that there is a low. I mean, tomorrow I'll set my system very well. So next class I'll set my system very well so that I will just not. You can see a low here. Then you can see another low. Or let me just let me use the region to just explain this. So you can see low here, and then this is a high point here. Okay, and then this is a high around here. Uh, is a high around here, okay, which is there. Now, the market now came down to form a low down here, okay? Market came from the low. Oh, when it's so stressful. Market came from the low here. And when it was going to form a high, it never went to the point of this high again. So the highs you can find are somewhere around here now, right? Somewhere around here. The highs you can find are somewhere around here. And then you can see that there's a new low that is lower than this point. Okay? That's lower than this point. So this is what we call a downward trend. How do you establish a trend now? That's the next thing I want you guys to write. Now, you can see this is a downward trend will be forming lower highs and lower lows, okay? Lower highs and lower lows. This is a high from this top side here, okay? This top side I did not mark is a high. This is a low here. This is a low here. This is a high. The market came and formed a low that is lower than this one, okay? And when it went back up, it formed a high that is lower than this one. So this is a lower high and a lower low. It came down, formed a new low, lower low here, and formed a lower high. That's formed a lower low here, okay, that is lower than this one. And then you can see it has come here tested like that. Most likely it will come and break this low, you understand, and form a new low, lower low here. This idea alone gives you a sense of understanding how markets really moves, okay, how the market moves, okay. So that said, I've explained trend, upward trend and downward trend. Now, the third one is when the market is not moving at all, okay. For instance, there are points, there are times the GBP JPY I showed you, you can see all these points. Market is not going anywhere. It's just here, just playing around here. This is this week, okay? Just playing around here, not going anywhere. The market is consolidating, okay? This is what we call a consolidation. At this point, the buyers are reinforcing. The buyers are still in the market, okay? They've not sold their position, okay? Now, I'm beginning to say things I've most likely not said before. In the markets, what makes price go up? You can say that, okay, the buyers are, or there are more positions for the buy. Okay, so the buyers are in the market, so it's pushing the price up. Okay, so when I say that the buyers are still in the market, it means that the people who bought and they held at the buy position, they are still in the market. So, but the price is consolidating at that time. And start to gather momentum to now go up further. Okay, so now, how do you establish a trend? How do you establish a trend? I've shown you, but I want to use another example to explain it. The market does not move in a straight line. It moves in a zigzag direction. So it means that the market must show you what we call pullbacks, okay? If you're taking notes, okay, if you're making notes, write, subtitle these, what we call corrections, okay? Corrections in the market, okay? Title it corrections. Now, corrections in the market will take two forms most times, or three forms most times. One is called pullback. A battery is almost low, so we'll end the class uh, in the next 5 minutes, okay? One is called pullback. So corrections could be three ways, three forms. One is called pullbacks. The next is called retracement, and the last is called reversal. Pullbacks, retracement, and reversal. These are corrections in the market. What is a correction? Look, let me give you an example. Price is going up here, from here, okay? Can you guys see my screen? Hope you guys are following me.
Yes, sir.
Price is going up from here to this point. And it got here and it now decided not to go again. It came down small, came up, came down, played before it went up. This thing is a correction. Price is just correcting itself. When I start teaching, okay, I jumped. Horizontal, I thought horizontal and then uh, diagonal support and resistance. I did not teach dynamic support and resistance. So tomorrow's class, sorry, not tomorrow, Monday's class, will start with uh, dynamic support and resistance. I'll just say a little bit about it, why it's useful, okay? And then we'll now come, but I don't want to go back to that. Now, price played around here a bit. This is a correction. This is a correction point, which we can call a pullback. Okay. So price came, the sellers pulled it back a little. You understand? It pulled back a little. It went further. You can see price is going, there's a pullback, it will go, there's a pullback, it will go, there's a pullback, it will go. That's what we mean by pullback. So when we say pullback, you can see physically in the market that this is an impulse move. Price moved very, very well. Price showed you clearly that I'm going up here and then there's a pullback. It moved again to form the next level, the high that's higher than this one. And you can see there's a pullback. It is when those pullbacks are forming, you understand? It will not go and give you it will give you a low that is higher than the previous one, if it's a buy, that's when you know that, okay, this is the structure for an upward trend. So when we say market structure, this is what it means. So this is a low, it has gone high here, it came back, the pullback formed a higher low. Okay, so this is a structure forming for a buy. Okay, it had gone up to form a higher high. This is a structure, and there's a pullback. You understand? So to confirm a trend, you will see pullbacks. Okay, pullbacks, price will go again. You see another pullback, price will go again, something like that. So that's what we call market structure. Okay, or for correction, what we call pullbacks. Okay, now the next thing I talked about correction is retracement. Retracement is when the pullbacks now are longer, okay, longer than usual. Let me say, for instance, I want to end class here. So I'll talk about retracement next class from pullback to talk about it. So I'll give you an example, but I don't want, because my laptop may go up anytime soon. I want to end class now. So you can see this thing. If this price goes here and then this pullback came here and formed a low that is lower than this low here, like that, then afterwards, price still now went up again. You see that thing that came down that broke that structure of pullback. That one is called a retracement. I'll give you good examples to show this in the next class, okay? But I just wanted to explain it to you. Okay, that's what we call a retracement. And the reversal is when price has automatically, when the price has changed direction, is going downwards, okay? That's what we call a reversal. Do you guys understand what I've taught so far in market structure? This is just introduction to market analysis, market structure. Do you understand so far?
Yes, sir.
Okay, if you understand, do you have any question? Please, if you have any question, ask quickly and let me take them before we close.
Sir, how do we know the time to use for this? Now this thing is in 4 hours. How do you know the best time
You can
to
do
use
your
if it's
analysis.
drawing an
You can do your analysis on any time frame, okay? But basically, when I taught you about time frame, I told you that the time frame you are putting shows you what one candle is saying. This is 4 hours. It means that 6 candles is what will represent one day here. So the higher the time frame, the more accurate you are towards the overall trend in the market. But this analysis you are doing, you can do it anywhere. Okay, so it means that for let me say you are seeing a buy on a 4 hours time frame. That your buy now, so on a 4 hours time frame, when pullback is happening, that pullback can take, like, see this case here now. Price went up here, shey, and then there are 4 candles that represented this pullback. 4 candles. These 4 candles now is 16 hours. In one day, if you are trading one hour of 30 minutes candle, that day the market is selling. The market will be selling that full day in your eye. Okay, you get. So, but because you're on 4 hours, you are seeing that, okay, this is a pullback. I'm waiting for to continue my buy. Do you get? So that is what it means. You can do your analysis on different time frames. So any time frame you are doing it, just follow that time frame to take your trade and then move on. Okay. When we do correlation in terms of time or time analysis, okay, you understand this better, and then where to do your analysis and where to go and take your trades from. Okay. So that said, um let us end the class here. I'll see you guys on Monday, and then the class will get more interesting because I'll be sharing a lot more important stuff that will help you know decisively what to do whenever you come to your chart and then you want to trade. Okay. So thank you guys for today. I'll see you guys next week.
Thank you, sir. Good night, sir.
Good night, Mr. Bijogun.